Hi traders, how are you? Vladimir Ribakov here from Traders Academy Club, and welcome to the weekly Forex review for the week starting on 5th of November 2017. First, before we start, I would like to thank you very much for the time watching my videos. I hope you enjoyed that, and I hope it helps you in the view on the market and choosing the trading directions during the week. If you enjoy from that, please show your support back, leave some feedback on the button below the video and hit the like button. Also, feel free to share this video with anyone who you think it could be it could be helpful to. I would really appreciate that. And as I always say, your feedback is my team motivation. We know that we work for you and we do well for you. This is very important for us, and thank you for that. So the previous week we had a non-farm payrolls week, FOMC week. It was full of events, and of course the hike in Britain, which dropped the pound, surprisingly or not. This week is expected to be very interesting as well. We have cash rates in Australia and New Zealand. We have speech from Draghi. We have speech from Yellen. Welcome to another interesting week with many opportunities. So let's start go over the charts and see. But before that, of course, quick view over the this week. Inflation expectation in New Zealand to be published on Sunday. Then a speech from Kuroda in Japan. Cash rate in Australia, which not expected to be changed, but of course what's more important is the statement that should show what's coming on the future. Then we have a speech from Draghi on Tuesday and a speech from Paulos in Canada and Yellen in the US. Then we have official cash rate in New Zealand. Now here come a lot of rumors. The expectations are to stay the same. Some rumors about increase, some rumors about dropping. I think it's mainly about to manipulate the pair a bit. I have very big doubts they will be dropping anything, while the rest already started to increase the rates. And then we have the speech from Chairman Jordan in Swiss, the monetary policy statement in Australia, and the US holiday with the Veteran Days this Friday, which will mean Friday should be non-tradable day. Maybe just scalping during the European session, because the volume is expected to be very, very low. So let's start technically. Euro Yen, this pair, we have been talking about it for a while now. The bottom line here, as long as this stop holds, we remain in a bearish view. Break above this stop should open the doors towards 137, 138, maybe even 139 zone. But as long as we are not there, I am in a bearish view, and I would expect it to drop as low as to the 38.2 of this cycle, maybe even the 50% of the big triple cycle. Now we do have this little triple cycle from the 4-hour chart, and the first initial level will be the 131. So for me, it's bearish while we are below this stop. Dropping to the levels here, we can see Euro Yen. Here we go. We are right on the channel, bouncing from the action zone. The top was created on the second 4 was monster days for tops, and this is a critical level right now. If we manage to break it down right below this area, I would expect it to continue all the way down. If it has problems in this area, there is a good chance for the reversal. So we should see how the behavior happens the beginning of the week, and follow accordingly with the momentum to be developed. As I said, for me it's mainly bearish versus the daily tops. The next pair which I would like to discuss about is the euro dollar, of course. From previous week we have analyzed on a bearish side And so far, it's moving pretty much as expected. We don't have any bullish evidence. We're currently only in a bearish evidence. 2 waves up and a breakout looks really, really good. From my point of view, all the chances lead us lower. And I would make it very simple as long as we are holding this trend line and going down, following lower highs, following lower lows. From my point of view, we are going lower, and the levels which I would be waiting for and looking for are parallel here. 115, level number 1. If we take a look on this cycle, it's also the 61% retrace right here. 115, same area. Now on the big cycle here from the daily, that's 115 and then 113. Both very possible targets, and I believe there is still more to go to the downside. The only invalidation here would be if we get 3 waves up, then 2 down and retrace. So basically, if that was the case, 1, 2, 3, 1, 2 breakout, I would say bullish. But we are not there yet, therefore the pressure remains bearish. And the second invalidation that could happen would be if we have false break, okay, 1 or 2, convergence by creating higher highs, 2 waves retrace and breakout, and then we can really go and fly to the upside. As long as none of this happened, the pressure remains bearish, exactly as presented on the previous week. As per levels here, we can also see that the bounce happened right here from the first. First was very powerful top. The bounce happened on the second. So from the first, we always have a day before, day after, to have a range of days for us to watch for tops and bottoms. We got it here. We got it right inside the tunnel. Can we get it better? No, we can't. Bouncing from around the action zone, really cool. Now we have this level holding as a resistance, and we have the 1 hour chart level as well. Okay, let's continue, guys. Pound dollar. Now pound dollar, this is a mystery, right? From one side. From other side, not. Because we were talking about this channel and it was holding it. Yeah, it was trying to break this high, right? Was trying but failed. Once it's failing, it's a sign for weakness. Why does that happen? I mean, they increase the rate, right? So how come the pound is dropping? I said it on the previous week, and I was talking about that in my live trading groups in Traders Academy Club. The idea is simple. It's not about what happens now, it's also about what is expected later on. So the hints, every single hint, every single direction that the central bank can give for further rate decisions, that's what gives the boost to come. And because before that, everyone expected the pound to rally, and it was rallying, right? It was rallying all this way up because it was expecting for a hike. And from this area, we got the consolidation waiting for the next. The next was disappointing. They are not in a rush to increase more rates. They are considering positively 7 versus 2 in the members of the central bank, considering dropping the quantitative easings, and that's very bad for the currency. And we saw the disappointment on the bulls pushing that down. Bearish control is on, and as long as we are below this high, it continues. Targets 127, 128 zone. Only from there we can stop and discuss again about the buys. All that is relevant as long as this top holds. Okay, that's for the pound dollar. Euro pound, the bearish view, well, of course it's still on for the long run because of the weekly channel, but we do need to pay attention to this bounce here. This is a bounce of false break and a bounce with bullish divergence. So basically what could happen in here is easy situation of 1, 2 breakout and further continuation, deeper run to, I would say, 090, 091 zone. I don't see that going higher than that as for now. For me, every rally in 2 waves is still a sell opportunity. The only reason why this buy could take place is basically because we did break the trend line and we do create higher highs here right now. It brings some possibility for a further continuation up, and I would not be surprised to see that. However, it was a only news shade to the upside. If we get 2 waves up, it could be an opportunity to look for the one more push to the upside, 090, 091 zone. If not, the long-term bearish from the weekly cycle remains on. And I want to remind you where it all comes from, right from here. This range, and at the end of this, at the end of this triple 1, 2, 3. So easily we can expect this push to the downside. And for long run, I suspect that's what's going to happen. So this is my view. My view for the euro versus the pound. Dollar yen, mysterious. From one side, as long as we are below this high, we are bearish. This is from one side. From the other side, this is a range. Break above this range could boost it up towards 116 to 118 zone, where from I would expect again a sell off. From my point of view, we are in a bearish mode, and I would say it this way: if we manage to break this trend line and start to create lower lows here, what's wrong with my pen here? I believe this is a wake up for the bears. Break above this high could easily lead us towards 116, 118. I would not deal with longs, even though I understand completely I can miss up this opportunity. But versus this divergence, I wouldn't really rush to trade, and especially with the weekly top of the range, wouldn't rush. So for me, if we break above, I will become neutral easily, and will wait for my next opportunities for next levels. In other words, I prefer to miss the buys rather than regret the buys. You understand what I'm saying here, guys? It's too easy to enter positions and regret on them. Too easy. It is harder to understand when it's best to skip and not trade. And this is basically one of the situations. And that's why I want to present it to you. Next one on the list, dollar Canadian. So far, so good. 129, 130 was the level we were looking for, the retraces down. Here we got our triple wave down we were looking for. 1, 2, 3. Here we got the 1, 2 on the 15 minutes retrace, and this breakout was a gift. We are moving down. Targets as suggested on the previous week. 38.2 of this cycle. So from my point of view, we're going towards 126 first of all, then 125, and then we will see if that's the beginning for the next low. For those who are in, move to break even in such opportunities. Most important case, not to lose the profits. And I say that for one reason. If the dollar strength continues after the good news in terms of unemployment rate and non-farm payrolls, break above that and higher highs could easily return this pair for one more push towards 131, 132 for full duplication here. You see that level, guys? That would be 130, and then we can go higher, like to here, for a full duplication. So I wouldn't avoid that. That's why, from my point of view, those who enter the sell right at this place with the breakout, move to break even. There is no reason to try to be hero. And of course, the lower highs, lower lows, that's the format for the sell. That's what we want to see for the sells, right? Aussie yen, also same story like with the euro yen. As long as we have lower highs and these high holds, bearish. That's my view here. I would even go further. This is the invalidation, basically. As long as we are below, it's bearish from my point of view. Targets, I would expect 50% of this one, around 86, and then 38 of this cycle, which is 84. So that's my view for the Aussie yen. CAD yen, also bearish. But with this one, we do need to be careful. Break above the trend line and above the highs, open the doors to the next high, which will be 94.95 zone. So be very careful here. CAD yen is the only one that could show some bullish signs. Break of this high and the trend line, change the plan, and then open the gates for 94.95 area. Pound yen, basically still in both directions. From my point of view, this is the less clear one, and yet I prefer bearish for the reason of the break of this trend line. It is broken right now, and we do gain lower low. So for me, it's a bearish sign. Cannot say this is the most classical one, but basically while we are below here, I would be looking for two waves up, breakout, and continuation. As per levels, we can take a look on the not Scorpio here. As per levels, that's the levels we have. That's 149.80 zone on the 1 hour chart, 149.80 on the 4 hour chart. Looks really, really good. Next levels would be only above 150, as you can see here, guys. The beauty thing here, take a look, was the bounce. First and second, exactly from the statistical numbers. Classical, again. Okay, let's continue, guys. So we discussed about the yen pairs. Let's move on. Australian versus the dollar. Now, Aussie dollar, exactly as explained previous week and during the live trading rooms this week in the Traders Academy Club, Aussie dollar does not have any bullish evidence, which means we don't have false breaks, we don't have convergences, we don't have three waves up. This is what I was looking for. 1, 2, 3. We don't have it. It could now go and make this 3, and then we will say 1, 2 and breakout, we are bullish. As long as we don't have it, it is bearish, which means it is as hell. And that's what I want you to understand, guys. So many traders are rushing into positions. Oh, it's running now. That's all. Let's buy. Guys, the timing thing is the most important thing in trading. Timing is crucial. And that's the main thing I'm teaching day by day in the Traders Academy Club. And I would, if you are still not a member, I would like to see you inside so you can see that happening live with us together day by day and learn from that. Why? Because there are specific conditions for validation and invalidation. Invalidating for a trend, for a cycle, is a false break and convergence number 1, or alternative 3 waves up and 2 waves down with a breakout. So we had to see false break here, higher highs, and then we are after buys. Or the alternative, as I said, 3 waves up, 1, 2, 3, 2, and a breakout, and then we are a buy. As long as it doesn't happen, there is no evidence for a buy. Now, this is, we don't have ending cycle. Yes, it could also turn to be a range, but then we will have false break, higher highs, and then we will need to buy the bottom of the range. It doesn't change the plan. False break, higher highs. This is the idea of the range. Okay? That's what I want you to understand. As long as we don't have it, we are looking for sales. And this is a classical sell opportunity. Previous week, the guys from the Traders Academy Club with the Scorpio managed to take it and run the sell. Now take a look here, the very basics and the very classics of the divergence. This is, who can tell me what is this, guys? Think about it. What's that? It's called a bearish hidden divergence. More than that, this is right on the trend line. You can see it right here, connecting the tops. If I consider this as a little false break, bouncing right from there and from the resistance area. When it comes together, we don't need much signs. So as long as we don't have false break convergence on 3 waves up, the evidence is bearish, and the pair could continue lower. How much lower? Well, 0.76, 0.75 are critical levels. At this stage, I don't think it will go lower, but it definitely could take us towards, where is this level? 1 and 2, right, to the middle of the range again, which will be around 0.74 as well. I don't see that going to below 76 or 75. I think that's where we will start to get the end of the bearish momentum, but it's currently yet bearish. New Zealandian dollars though played different game here, and this is what it did for us, right? We got, where is that? We got it 1, 2, 3, 1, 2, and a breakout. Now we have bigger count, which is here. 1, 2, 3. This count so far beautiful. If we get here 1, 2, we can start looking for the rejoining to the upside. This view would remain bullish only as long as we will have the, what is that? We will have this low holding, because break below this low opens the door for further move down, and then we can easily start looking for the 66 or 65, the bottom of this of the previous levels, maybe even all the way to new lows. For New Zealand dollar, we have cash rate. Also for Australian dollar, cash rate during this week. Eyes on that. From there, the next direction should be decided. Aussie versus the Kiwi is another great pair. We were long until 113. Once we reached that, we switched short. Currently, it's making two waves to the downside. This is the first one. So we have critical zone around 110, sorry, and then 109, I would say. From there, I would start looking for buys again. Currently, it is yet bearish, and we should see how it's going. This is critical zone, the 110, 109.50, going down to there, so we can expect this. Right? Here, breakout, retrace, breakout, and fly again towards new highs. So it's yet bearish, but I think it's running to the end. Euro versus the Kiwi also making a beautiful corrective cycle right now. We have triple dropping, so triple descending. I would expect a bottom somewhere in between 167.50 down to 166. I know it's a pretty big range, but this is the range. From here, I would expect two waves up and then a breakout for a deeper correction down. News from New Zealand would be the siding cycles here. Pound versus the Kiwi made for us this kind of special cycle. Even though in terms of count, it's really far away from being the best. So we can expect maybe even a bit deeper wave now, then two up, and then another sell off. Generally, while we are below this high, I think the chances for deeper correction or in two waves get bigger and get more serious as for now. But keep attention to the news. News from New Zealand is the cash rate. That's what should be deciding for us. Opportunities to go for sell, guys, would be right here. That's our levels. It starts from around 190. This is 189.70 to 190.20, and then we have the 190.150 area. These levels are critical to look for evidence, for bearish evidences. So here, we could start looking for the bearish evidences to the downside. And that's for Forex. Now we have much more opportunities, which again I will cover deep on a daily basis, because they still need to format the things, like CAD franc, like Aussie versus the franc, New Zealand and New Zealand franc. All this need to polish a bit, and we have the call there. Oh, dollar franc, by the way, dollar franc is starting to show some warning signs. We did have one false break right on the top, We can have one more. No? One more visit, false break, lower lows, and then we can start looking for the sells. Or the alternative is if we start to build triple cycle down. So 1, 2, 3, 1, 2, breakout. That's the whole theory here, guys. The whole theory of momentum and timing. As I said, we do the day by day in the live trading room, so you are more than invited to take part and learn on the live appearances, how it happens, how we figured it out, and how do we call for invalidation and validation levels, which is critical. Gold and silver will be our next ones, as long as now gold has all the warning signs, simply because now what this one did was a range. It was doing false breaks. Now one on the bottom, one on the top. Very warning sign. I would still prefer to look for the buys here. This is the current trend line developing. So if we break above that, I think the momentum returns to bullish. If we don't, and we break below that, it opens the doors towards 1240 easily. Could be reached there. So very carefully with the longs here, wait for the better momentum. Same with silver. If it refuses to break the current trend and develops, we are moving down to 16 again. And this is of course what I refer to at this stage. Okay, this is the trend line. Break above that should return it bullish, but you can see what it's doing right now. These zigzags are basically a safe from the market. Bulls are not serious, not ready. Bears are still here and are still control. And in such conditions, don't try to be a hero and make a bet and convince the market that you are right. Because if you try to convince the market that you are right, the market can bite. Be careful with that, could be painful. Oil, we have been long here for a while. I want to remind you where it all started from, right? So those of you who do follow the weekly forecast and the weekly reviews and the daily live trading rooms, we are long from here. It's more than 500 points to the upside right now. As for now, no evidences for bearish move. We did have one false break on the 1 hour chart. It might turn to be second false break. It's not there yet. So what we need is false breaks and lower lows, or 1, 2, 3, 1, 2, 1, 2, and breakout. Then and only then we can discuss about a short beginning the run. If not, bullish evidence stays on. As per indices, now this is very tricky. S&P still holding this top, like double spike here. Divergence developing here still on that place, as you can see. We did have lower lows, but with everything happening with the indices right now, all the speculations and manipulation there, everything would happen. If you go here and trade the convergences, minimize your risk for one reason. You have to risk minimal, because we can allow ourselves to be wrong 1, 2, 3, 4 times. Once the move happens, this is where we will make money. So it's not about being right, it's about making more when we are right than losing when we are wrong. That's what it is about, okay? So for me, I'm looking for bearish opportunities while this top holds. Nasdaq doesn't have any read as for now. Dow Jones, this is the low that has to be broken in order to start the sell journey. So break below here and we can call it bearish. And basically, oh sorry, one more. Natural gas bounced from the bottom of the range, broke the trend line once, broke the trend line, and once once again gaining the momentum. Moving in two waves right now, start to create some divergence. I would move to break even easily to 227 zone right now and let it go. It could be a huge fly to the future, so don't rush to get out from these longs. If it's about to gain the momentum, it's about to be very, very, very paying. Quick about the new generation of trading, new generation of markets, a new financial market that is developing here in front of our eyes live. Will that be legal? Will that be illegal? Will that be illegitimate? Will that be just a gamble? Who are we and who am I to judge? As it looks right now, it has all the reason on earth to become the next future. And I want to discuss about it. Bitcoins. As for now, only flying up, not even one evidence, but it does start to create here signs of, as you can see, signs of the false breaks. Now, if we do gain below momentum, below this low, I would be starting looking for retraces and breakouts for possible sells versus this top. As long as it didn't happen, it's only bullish. Ripple, I am looking here as a long-term investment, and from my point of view, we are in front of one of the best. It is kind of a range, kind of a triangle. This zone from 0.22, I would say 0.14 or even 0.11 is a monster zone for buys, for long term. Ethereum so far moving also inside the triangle, bottom of triangles, buy opportunities for me. Want a better momentum? If we get new low, mark the trend line, breakout, and you get yourself the buys. The next one, the next few, that from my point of view provide nice opportunities. Ethereum Classical, I love this one. 2 waves down, looks good. No, where is my pen? Here. On this view, 1, 2, now forming kind of a range. Amazing candle from there. Could be a really nice opportunity for the investment. As long as this bottom holds, I'm bullish on Ethereum Classical. Dash, I want to see that trend line, which is a monster trend line, being broken in order to call for the bullish view. And with sorry guys, and as for Litecoin, I would prefer to see 61.8 of this cycle, which is double bottom over here. I don't have clear view on this one as for now, but if we start to recreate the highs, which is currently it's in between this to this is the real high. Breaking above that could start to open the doors for the bulls. I don't trade Litecoin myself much, only as per scalping opportunities here and there. Not one of my favorites, and that's all. That's the main opportunities as I see them. I will start and include more and more cryptocurrencies opportunities. More as for longer run, because for scalping, it's almost impossible to give a review. It's a strategy. It's you do it right here, right now. You can use, for those of you who use my systems, for example, you can use the Scorpio, which is great for scalping, and on such volatilities, and SRS, which is great for scalping as well, on that market conditions, volatility based. So that's all for this week. Thank you very much for watching the video. I hope you enjoyed that. I hope it helps you to have a bit better view over the market. As I said, there are more pairs to cover, but it's impossible to cover everything in one video, of course. Some setups still need a bit more confirmations. and we continue them day by day in the Traders Academy Club. If you are not yet a part, I invite you to welcome to our family, join our family, and you will understand exactly why it's so important to trade with the best of timing. It will save you tons of money, it will save you tons of energies, because if you put your energies over and over and over again on some instrument and it doesn't move, it doesn't go, you get disappointed. Once you get disappointed, it moves, and then you get even more disappointed, right? And timing is so crucial. Choosing the direction, choosing the timing, that's all what we do. That's all what I teach in Traders Academy Club. And remember, it's not about being right most of the times. It's about making more when you are right than losing when you are wrong. No one cares about how many times you are right, unless you want to be an analyst and not a trader. For trading, it means nothing how many times you are right in your predictions. You can be right only one time out of 10 and still make more money than on the times you lose and you are wrong. It's all about timing and your management in the on your trades. It's all about that, and that's exactly what the Traders Academy Club for. I hope to see you inside. Thanks a lot for watching this video, and as I said before, your support is more than appreciated. If you can leave your feedback and show your support to me, to my team, it will be more than appreciated, and thank you in advance for that. Feel free to share with anyone who you believe can have a good benefit by watching this video, and subscribe to the channel, hit the like button, and once again, thank you for your time. I wish you all the best, and I wish you a wonderful trading week. Yours, Vladimir Ribakov, Traders Academy Club.
Thank you for watching. We appreciate your time. We invite you to join the #1 ranked trading club online, the Traders Academy Club, and to start trading like a real professional. Our students make amazing returns, and you can do too. Let your successful trading journey begin. Join Traders Academy Club using the link below this video now.